Hello everyone, welcome to Yadnya Investment Academy. Today we are going to do a mutual fund review. Let me first explain the methodology of the review. We will first list and review the fund on various parameters and rate each parameter by green, yellow or red star. Green star means good performance, yellow star means average performance and red star means below average performance. In the end, based on the total number of green, yellow and red star, you can take a call to buy this fund or not. Please remember, all the fund parameters we are going to discuss here are based on 16th May 2017 data as reference, and we only review regular and growth plans of mutual funds. In this video, we are going to review fund name HDFC Equity Fund, which is a multi-cap fund launched in 1995. Before going into review, let's understand about fund's objectives. Fund invests primarily in equity stocks and is ideal fund for long-term capital appreciation. It can diversify across industries, economic sectors, and companies' market capitalization. Now let's start the detailed review on each parameter. First, the fund belongs to HDFC Mutual Fund family, which is currently India's second biggest fund house in terms of asset under management, out of more than 45 fund houses, and was established in 2000. So for being a very large and experienced fund house, we give a green star here. Equity fund was launched in January 1995, which at that time was part of Zurich India Mutual Fund and was merged with HDFC in 2003. This means it is active for more than 20 years now. So for being an old and very experienced fund, we give it a green star here too. Fund is categorized in multi-cap category as it has flexibility to invest across market capitalization and can increase or decrease share in any company irrespective of its size. Now moving to next, this fund has a large asset under management of more than 18,000 crores and is actually the biggest pure equity fund in India. So this high asset under management speaks volume about funds' consistent performance and investors' trust in funds management and hence deserves a green star. Now let's talk about the moolah, that is the returns. We will first talk about the trailing returns from 16th May and then talk about the calendar returns. In trailing returns, we can see fund has consistently beaten its benchmark index, that is Nifty 500, across 1, 3, 5 and 10 years, but has performed below category average in 3 and 5 years return. In 10 years trailing returns, fund has beaten both benchmark and category by good margin and is among top performers in the category. Trailing return performance shows average fund performance in medium term but good long-term performance. Now looking at calendarized returns of last 10 years, that is from 2007 to 2016, which means returns from 1st Jan to 31st December of a calendar year, we see that there have been two instances when fund was beaten by both benchmark and category average, that is in 2007 and 2015. Out of them, 2015 was definitely a bad year for the fund, and of course there are some great performances too, like in 2009, 2010, 14 and 2016, where they have beaten both benchmark and category average returns by good margin. In bad markets of 2008 and 11, the fund's performance was near average only. Now looking at this, overall fund's calendar year performance is good as they have beaten both benchmark and category average 6 times out of 10. They had some very good years and basically just one bad year, that is 2015, due to which their both 3 and 5 years trailing return performance got spoiled. So due to this relatively good performance with one bad year and looking at their average bear market performance, we give this fund 1 green and 1 yellow star on this parameter. Next important parameter is fund manager. The fund is blessed to have a star fund manager Prashant Jain as its leader since 2003. He is BTech from IIT Kanpur and MBA from IIM Bangalore plus a CFA. He was working for Zurich AMC since early 1990s and went into HDFC after they acquired Zurich's India business in 2003. Prashant is also CIO of HDFC Mutual Fund and is one of the most celebrated fund manager in the industry. Prashant also manages HDFC Prudence Fund since inception, that is 1994, and HDFC Top 200 Fund since 2002. Both are very popular balanced fund and large cap equity fund respectively, with more than 22,000 crore and 14,000 crore asset under management respectively. Both these funds are very consistent performers and have given overall very good returns. Of late, there have been few question marks on Prashant's magic touch, as his fund's performances have not been exceptional like earlier years, and some blame it on high asset under management he manages, which is nearly 54,000 crore rupees. But we trust Prashant's methods and his research and wouldn't change our opinion on one or two average or bad performance years. Name Prashant Jain should be enough to give this parameter a green star. Next parameter is top stock holdings of the fund and understanding the fund's diversification. As on 16th May, fund has 53 stocks in portfolio, with top 5 contributing close to 37%. Current cash allocation is almost none and 100% is in equity. Fund doesn't have a great diversification in portfolio with very high allocation to top 3 companies. Weightage of top 5 companies is much higher than our benchmark of 25%, and hence we give this parameter a red star. Next parameter is sector diversification. Top 3 sectors contribute to close to 56%, and fund is definitely overweight on financial sector, which is a current trend in the industry, and therefore we give this parameter a yellow star. Next are expenses. Expense ratio of this fund is 2.13%, which is better than average expense ratio of this category, that is around 2.28%. Exit load of the fund is 1% if investment is redeemed in first 365 days, which is what most equity funds do. So overall, due to good expense ratio, we give this parameter a green star. Now those who like numbers, let's discuss few important ratios too. Standard deviation, a measure of volatility and risk, is higher than the benchmark and category, which means it takes higher risk than them. Beta 2 is a measure of risk and is also much higher than the category. Alpha, which measures the risk adjusted returns. So 4.8 alpha here means it can perform 4.8% better than the benchmark. But unexpectedly, even by taking higher risk, it has much lower alpha, that is return potential, than the category. So this means this fund is a high risk and low return profile fund. Last is P ratio of the portfolio, which is 22 and much lower than the benchmark's PE of 27.9. As the fund is high risk and low return profile fund, therefore deserves a red star. Few other important info to note about the fund is that currently it is a large cap focused and hence has 75% current investment in large caps. And this table here shows how rupees 10,000 SIP would have performed in various time frames and prove very good performance and great returns this fund has given continuously. So if we calculate, we got total 6 green stars, 2 yellow stars and 2 red stars. With higher risk this fund is taking compared to peers being the major concern. To summarize, HDFC Equity Fund is a very popular and old multi-cap fund. Fund has given close to 20% per annum returns since launch and is managed by a celebrity fund manager, Prashant Jain. Fund has been a consistent performer with only 2015 as a bad performance year in last 10 years. Currently, fund is surely taking much higher risk than peers and big bets on few stocks, which raises red flags, but still we trust Prashant's methods and are ready to go for a ride with him. Prashant's funds are always in so much scrutiny that even a single bad or average year raises questions over his losing magic touch or not able to manage very big asset under management he has. But Prashant brushes all these criticisms with just one thing, that is performance. He is known for his in-depth research and do combine top-down and bottom-up analysis before selecting a stock. It is noteworthy that Prashant invests all of his own investments in his own funds, and which proves his faith in his skills, which he has demonstrated multiple times by navigating the fund across market conditions and delivering great long-term results, not just for this fund but for his overall portfolio. That is all we have on this fund review. If you have any question, please do write in the comment section below, and do not forget to subscribe to our channel. Have a great time ahead.